To check the price movement of a stock, you can use several methods and tools. Here's a basic guide to help you. 1. Financial news websites and apps. Websites like Yahoo Finance, Bloomberg, and MarketWatch offer detailed stock information, including historical prices, news, and analysis. You can search for the stock's ticker symbol and view its price history, daily changes, and other relevant data. 2. Stock market apps. Apps like Robinhood, Trade, TD Ameritrade, and Fidelity provide real-time stock price updates, charts, and news. You can track stocks, set alerts, and even buy or sell shares. 3. Stock charting tools. Platforms like TradingView and StockHarts offer advanced charting tools where you can analyze price movements, trends, and technical indicators over different time frames. 4. Brokerage accounts. Most online brokerage accounts provide tools and resources to check stock prices, historical data, and other relevant information. You can access these features if you have an account with a broker. 5. Google Finance. Google Finance allows you to quickly search for a stock by its ticker symbol and view its price, daily movement, and related news. 6. Financial news channels like CNBC and Bloomberg TV provide real-time stock market updates, including price movements and expert analysis. 7. Stock ticker symbol. Says the specific ticker symbol of the stock to search for it. For example, Apple Inc.'s ticker symbol is AAPL. 8. Technical analysis. For more in-depth analysis, you can use technical indicators such as moving averages, RSI relative strength index, MACD moving average convergence divergence, and others to study price movements. Would you like a specific example or more details on any of these methods?
Backtesting a stock involves simulating a trading strategy using historical data to see how it would have performed in the past. Here's a general outline of the steps involved in backtesting. Define the strategy. Entry and exit points. Determine when to buy and sell the stock based on certain indicator. Position sizing. Decide how much to buy or sell at each entry or exit point. Collect historical data. Obtain historical price data for the stock, including open, high, low, close prices, and volume. Implement the strategy. Write code or use a backtesting platform to simulate the strategy. This involves applying the strategy rules to the historical data. Run the backtest. Execute the backtest using the defined strategy and historical data. Analyze the results. Evaluate the performance metrics such as total return, annualized return, drawdowns, Sharpe ratio, etc. Adjust and optimize. If necessary, refine the strategy parameters and rerun the backtest. Would you like a specific example of a strategy, or do you have a particular stock or strategy in mind that you'd like to backtest? To check the moving average of a stock, you can follow these steps. 1. Choose a time frame. Decide the period for which you want to calculate the moving average. Common time frames include 10-day, 20-day, 50-day, and 200-day moving averages. The choice depends on your investment horizon and trading strategy. 2. Select the type of moving average. There are different types of moving averages, including simple moving average SMA, the average of the stock's price over a specific period. Exponential moving average EMA gives more weight to recent prices, making it more responsive to recent price changes. 3. Gather historical data. Obtain the historical closing prices of the stock for the selected period. You can find this data on financial websites, stock trading platforms, or through APIS. 4. Calculate the moving average. SMA calculation. Add up the closing prices over the selected period and divide by the number of days. SMA equals some closing price number of days. Text SMA equals frac sum text closing prices. Text number of days. SMA equals number of days some closing prices. EMA calculation. Use the formula that gives more weight. The calculation involves a smoothing factor. EMA equals price set a day times K plus EMA stir day times 1K. Text EMA equals text price underscore text today times text K plus text EMA underscore text yesterday times 1 text K EMA equals price set a day times K plus EMA stir day times 1K, where K equals to north plus 1. text k equals, frac to n plus 1, k equals n plus 12, and n. 5. Use charting tools or software. Alternatively, you can use financial charting tools, software, or trading platforms that automatically calculate and plot moving averages. Some popular platforms include TradingView, offers customizable charts and various indicators, including moving averages. Yahoo Finance provides basic charting and moving average overlays. Brokerage platforms. Many brokers offer built-in tools for technical analysis. 6. Analyze the data. Moving averages are often used to identify trends and potential buy or sell signals. For example, golden cross, when a short-term moving average crosses above a long-term moving average, indicating a potential uptrend. Death cross, when a short-term moving average crosses below a long-term moving average, indicating a potential downtrend. By following these steps, you can check and analyze the moving average of a stock to inform your trading decisions. Crossover strategies are a popular way of analyzing technical data for stocks. These tactics often involve combining two or more moving averages to create buy and sell signals. Here are a few common types of crossover strategies. 1. Golden cross and death cross. In this strategy, a short-term moving average SMA crosses above a longer-term moving average LMA, which signals a possible rise in stock price. 2. Simple moving average SMA crossovers. This technique involves setting up to SMAs of different periods. When the short-term SMA passes above the long-term, it indicates a buy signal. Vice versa, when it passes below, it signals a sell. Example 1. A 50-day SMA crossing above a 200-day SMA is a popular setup for a golden cross. 3. Exponential moving average EMA crossover. Like the SMA strategy, an EMA gives more weight to recent price data. This approach can make EMA crossovers more responsive to recent moves in the market. Example 2. A 20-day EMA crossing above a 50-day EMA is a common scenario. Point 4. Moving average convergence divergence MACD. Crossover. The MACD indicator uses a difference between a short-term EMA and a long-term EMA to generate signals. When the MACD line crosses above the signal line, it indicates a buy signal. When it crosses below, it signals a sell. 5. Price crossovers. This strategy involves a moving average MA and the actual stock price. A buy signal occurs when the stock price crosses above the MA, and a sell signal occurs when the stock price crosses below. Example 3. The stock price crossing above the 100-day SMA could mark a buy signal. 6. Dual moving average crossover. This strategy involves the MAS short-term and long-term and a third MA, often a longer-term one, to verify the overall trend. Across the short-term and long-term moving averages that align with the broader trend indicated by the third MA can produce more reliable signals. Key considerations: lags nature. Moving averages are lagging tools, meaning they reflect the past price data and aren't the most accurate for predicting future movements. Whipsaws. In highly volatile markets, crossovers can produce false signals known as whipsaws, resulting in potential losses. Time frames. The effectiveness of a crossover strategy can vary depending on the time frame used for the moving averages and the stock's volatility. Each crossover strategy has its own advantages and drawbacks, and traders often use them in conjunction with other technical indicators or analysis methods to boost their accuracy.